Hey, good morning. I wanted to review Friday's trades. Starting off on Friday, the market tried to move down to test the overnight low. So that was it, the initial move. On the open, there are a lot of reversals. So you can't really trust an initial move like this, especially if it's just headed towards an overnight low or some target that's below. So I tried to get there on the open, couldn't, and then ended up reversing up. Now, this was an interesting leg, and so I got a couple points to make about it. One, it's clearly a wedge shape. Now, but what are the three parts of the wedge? Well, when I was looking at this live, I was thinking that this initial push up and then pullback, I thought this was the first leg. So I thought it started there. Then pullback, second leg, pullback, third leg. So I initially had these 3 points as the wedge, the three pushes up. So first pullback, second pullback, third. And after the three pushes, it's at the moving average, it's often reasonable to try to do a swing trade from a wedge. The wedge is three pushes, and then you can expect to get about 10 bars and 2 legs down, which is ultimately about what we got. This lasted about 10 bars, and it was 2 legs down. But when I was also reading this live, normally when you see this move up like this to the moving average, and I think a lot of this just comes from the experience of studying these charts for so long, 3 pushes like this, you often need to get a fourth push that goes a little bit above the third push. And we actually get that here. So really here was the place to sell. So here was the place to wait for that one more push up, and then here was the place to sell. So that's just kind of a point from experience. And there weren't too many examples recently of that. I went back and checked, and I couldn't find one too recently. But when you're getting this move up to the moving average like this, so the wedge pattern is 3 pushes, but a lot of the times with this move up to the moving average, it'll get a little bit of a fourth push up, and that fourth push is what ends up being the top. So that's just something to watch out for there. So then this little fourth push actually becomes the sell below that. Or you could skip this entirely, this first part here, not even consider this the first leg, but instead consider the part up here, the first leg. So now this whole part is the first push, pullback, second push, pullback, third push. So then your wedge looks like that. And so that would be appropriate as well. 3 pushes with then this third going, kind of acting as a trap, right? The bears were short, and then they were stopped out, but then the bulls that bought, they were trapped, and then the market went down. So a couple of different ways to look at that. But either way, the short here ended up being the correct short. And after that, you do expect 10 bars and 2 legs down, which we got. As the market is starting to work its way down, when we're around this area, what's below? Well, I have it marked in. The open is below. And the open was already tested once today. So we opened, we went lower, and when we pulled back, we see this clear resistance that was formed by this tail on top. And then it ended up breaking out. So the open has already proven itself to be an important price. Then as we're pulling back, we might sell off very quickly and get back down to that. So we're on a swing short here. And so I like trying to get a scalp below this bear bar. And then you can get your 5 points out of it there. So sell below the bar there and get 5 points there. And you see how quickly that bar moved. Right, this is the biggest bar of the move. And actually this bar formed in the last minute, which is something fairly common. It's kind of taking its time, and then all of a sudden everyone decides at once that the buyer is overwhelmed, and then the sellers are taking charge, and they sell down to the open before then the sellers exit their shorts, and the buyers buy back, and that's what pushes the market up again. So I like looking for these little traps, especially when there's room to a target like the open. So here's the low, moves up, pulls back. This creates a double bottom, and these levels aren't exactly equal, right? I mean, you'd think normally double bottom would come back and test this same level, but really it doesn't have to. As long as it's double bottom is essentially two attempts to go in one direction that fail, and that's what we're getting here. So attempt 1 and then attempt 2. Now we get a 4th bull bar closing above the moving average, and a 5th. And after this 5th bull bar, to me it looks like the bears are trapped, and then where they're going to be exiting above bars like this. So I like the idea of buying above this second close above the moving average right here. And once again, you're able to get your a 5-point scalp there. And what's good is your profit target, if you go for 5 points, it's not too far above this high. It's a little bit, but I think there's still I think that's still a reasonable place to try to have your profit target. Market pulls back, does not get below this low, and so any bears selling here really never able to get very much, and they end up having to, they basically get squeezed out, and the market runs up over here. So when I'm trying to look at that happening, I see a bull close above the moving average and a second close. So I like trying to go long there, although you would have been stopped out. If you bought here, you would have been stopped out below the bar there. As this is forming, you can see what I have drawn in. This is a triangle. All right, so as let's say the day is here, and as I see that this low, and then a high, and then this higher low. So at this point, I want to start thinking there might be some kind of triangle forming here. We've been sideways for a little bit. And then here at this point, now we have a point and then 2 touches at that same level. And then we also have this trend line working down like this. So then there you go. That's your triangle. Now, the first breakout of the triangle normally fails. Okay, so this is the first breakout of the triangle. So we're expecting this to fail. So I'm not wanting to place any buys through here because I'm expecting to pull back to the apex of the triangle. And when I draw this across, you're going to see that I'm not just making this up, that these triangles really do matter. And I see this over and over again, and I put this over and over again in the videos. So there's your apex. Where does the market pull back to? Pulls right back to the apex of the triangle there. Comes up, pulls back again. And over here, it did go through it, but ultimately this was the area where the market reversed at. So it found support here and then support here again. Now, something that adds to this is 6,300 as well. We're right around the 6,300, so that's going to act as added support. But even without that, I would expect the triangle to get a reaction like this. Like this is normal to see. As we kind of move back here, so break out of the triangle, come back to the apex, and then you can look for it to either bounce off of it or break through and head lower. And here we're getting a bounce, and then so a bull close, and then a second bull close. So I like to be buying above this bull close or above this one here. Ended up not being able to get it there. Pulls back, bull bar at the moving average. So I like trying to buy there. Another reason I want to try to be buying through here is because lately we've kind of been having these resilient trends up. Like here is the prior day, and the market just kind of kept moving up, and every time it pulls back to the moving average, it gets bought. Or kind of like here, this is a better example because we actually had a triangle on this day. So triangle breaks out, tests the triangle, unable to go lower several times, and then right, if you're buying through this, then you're making money because this trend just keeps on heading up. So I was thinking that's what might happen here. So that leads me to want to be buying above bars like this or this. Market decided I wanted to stay as more of a trading range, so pulled back, and this is where I touched the triangle. And it didn't just come through here once. It actually, if you look at a lower time frame, you could imagine the market came down, tested it, bounced, went lower, failed to break out, went higher, came down and tested it again here, and then went higher. So there's actually a lot of price action that happened here. And if we pulled up like a 1 minute chart, you could see actually all the little moves that were happening there. And then you get into the end of the day. And we have the open of the day below, and you can see the market was kind of trying to get down to the open of the day, which you'll see that a lot. If the open was tested a couple times during the day, like once and then twice, then you'll see it be tested near the end of the day. And it was trying to get down there, but it couldn't quite. Ran out of time. Here's my Bitcoin trade. You can't see the P&L because it's Saturday, and NinjaTrader just doesn't display the numbers on the weekend like that. But this is what the trade is. I had my order was down here at around 110, 111, and it's moved up enough that I was able to move my stop up. So I've at least locked in 1,000 points on this trade, and then it's come pretty close to getting me out. You can see how close it came. I was just about 300 points away. So if you want to see why I entered this trade, and I explain everything in the most recent video I did, and I think the video is titled like how to find these breakouts. It's just the video I did a couple of days ago. So if you're interested in seeing that and then the explanation, then go back and watch that, and you'll see how I try to capture these like a 10,000 point move here, multi-day swing, and something like Bitcoin. And I didn't have any news. I didn't have any inside advantage on the news or anything that was going to break out. I was just looking at the price action, right? When you study your charts and you understand these things, and you can tell when a market is ready to strike. And the good thing about the price action, it's fractal, right? So it can be applied across any time frame or across any market. So whether you're trading Bitcoin futures or you're just trading stocks, or maybe you like forex and you're trading currencies, whatever you're doing, every market's going to have its own personality in a way, but the price action in general is going to be the same. You can look for the same thing across all markets. So once you learn some of these things, then you can look to apply them really anywhere. So check out that last video I did. I think it'll be really insightful for you guys. So this is the weekend. Enjoy you guys' weekend, and we'll see you back next week.